This week, Learning Saturday, we have 3 exciting webinars lined up for you. At 10 a.m., we start with Safe Investment Playbook with M2W, where we will discuss a safer and structured approach to investing. At 11 a.m., we have Gold and Silver in 2026, exclusively for Malaysian and Singapore NRIs, focusing on what to expect and how to position again. And at 1 p.m., we will cover Navigating Gold and Silver Trends, exclusively for NRIs in the UAE. To join all these webinars, kindly click the registration link in the below.
A friend of mine was priding himself about how he bought a housing company a long time back and how it turned out to be a 100-bagger. Fact is, it was a 100-bagger. But a small detail was missing in what my friend was telling me, which I knew, because I had not forgotten what happened during those days real time. After it became a multi-bagger at the peak, we had this conversation, which he had obviously forgotten, about what should be done with that investment. Beaten all expectations and generated unbelievable returns. At that time, I told him, it's better to be safe than sorry. This was not a company that was a wealth creator. What this company was, essentially, is a money machine. It made money for my friend, but that company was not a wealth creator. Interestingly, from that peak valuation, that company is now valued at 0. Friends, my friend had this opportunity to make the most unbelievable sum of money, but he made one mistake. He thought that company was actually creating wealth for him. He could not differentiate between a decision which actually made money for him but was not capable of creating wealth for him unless he walked out of it. Essentially, there are many companies which make money for us. If you take the jewelry sector in India, there are many companies that have made money for shareholders. But there is only one company so far that has created wealth for shareholders. And this applies to other sectors as well. I can lend this example to aviation as well, where I still believe the jury is out. So, you should know the difference between an investment decision, which is capable of only making money for you, which is a short-term phenomenon, and an investment decision which is capable of making wealth for you, which is a long-term decision. In one sector itself, there could be one company which is capable of making wealth for you, and all the other companies are only capable of making money for you. Friends, knowing this difference is very critical and fundamental to your success as an equity investor. Fund managers also make this Fund managers also make this mistake. They mistake companies which make money for them for long-term wealth creators, end up not selling when it is the best time to sell, and then with high regret and extreme sadness, sell it much later by giving away most of the money that it made for them. If only people were dispassionate in knowing which investment decision will be a wealth creator and segregating those few investment decisions from all the other decisions which are money-making machines, then an investor is likely to get the best out of his investing. If you see, there have been many investors who have traded on themes like infrastructure, transformers, solar, and many more in the recent days. You will notice that they have sold their stocks. If they didn't sell their stocks, then they would have lost the money. But the smarter investors end up making all the money, while those who believe that these companies are wealth creators end up waiting and regretting all the time. You, I, and all of us need to now think how we are going to play this market differently so that we segregate the businesses which are going to create wealth for us and all the others who are only capable of making money. Knowing the difference matters all the more now. Thank you for watching this video.